everyone. Welcome to Farm Journal Live. I'm editor Clint Griffiths from our newsroom here in northern Indiana, where it has been hot. I hope everyone had a great holiday weekend, enjoyed the 4th of July with loved ones, were able to get out and spend a little time out of doors, although that weather has markets kind of on edge as we start this week. Grain markets starting off the week with concerns about continued hot, dry weather. The forecast pushing soybean futures toward 4-month highs. December corn also a few cents higher at midday. We have a couple of USDA reports that we'll be watching this week. Later today, the crop progress report from USDA. We'll be looking at the condition ratings of multiple crops there. And then later this week on Friday, the monthly supply and demand report, of which we expect some reaction from USDA on whether or not they'll adjust our yields right now. Joining us today, we've got John Payne. He's the author of This Week in Grains and Oilseeds.
Hello.
And John, thanks for joining us on Farm Journal Live. Let's start the week off. What's your take on where markets are beginning here on a Monday?
Well, I mean, you have to be a little bit optimistic seeing the moves in soybeans and cotton to oilseed markets. You know, rallying, obviously weather is a big part of this. You look outside, especially if you live north and really anywhere in the country, you're dealing with heat. So the question marks then lie with yield. But in the meantime, it's really hard for a market like corn to rally because, you know, corn markets are like two cups. You have an old crop and you have a new crop. And if you're losing a little bit out of the new crop cup and you have a lot of the old crop still around, it doesn't feel so bad. You know, if you go back to 2012, 2013, that old crop cup was really low. It's not this way right now. So I think even with, you know, the optimism that the acreage was high or low rather, it still comes in at a pretty decent level. Gasoline prices are where they are, you know, just tough for you know, to think ethanol is really going to work at $1.10. Talking about cracking into that carryover number. So my point being is we can ration the demand or the demand of corn on the way up here. If we go to $4, you know, you'll see some people not use it, I imagine. So it's a very, very difficult thing to sit here as it's hot and it's dry in the forecasts and me to sit on, you know, national television and say, sell your corn. But I think you have to think if you've been holding out till this point, like this is what you hold out for. So you probably need to execute your strategy. One tidbit that if you game plan from the last few years, it wouldn't be to sell the front month contract like December. You know, look at your spring Q1 sales that you plan to make here, and we're up in the 370s for that March contract. That's pretty much where you have sold it the last 3 or 4 years. You can lock that in now and maybe deal with some of the more immediate needs for December later.
Yeah. As far as looking ahead, obviously we're going to be looking at this WASDE report that comes out later this week. Any fireworks expected in July here as, you know, we start to maybe get some production adjustments, although it does seem like USDA has been a little bit slow to make big adjustments this early.
Yeah, and anything they would base it off of, you know, tonight's crop progress, so we're doing this on Monday, crop progress on Monday would obviously have a little bit of effect in that, but assuming things haven't looked bad the last couple of weeks, you know, they're not going to adjust anything now. I think you and I have as good as a guess of what the final yield is going to be as they do, and that's not, you know, giving us much credit. So short term here, I think it's really about two stories. It's about getting the economy open again and like starting to use some of the domestic, because corn's a big domestic market. You know, the second thing would be that, you know, you got to see some sort of crop destruction somewhere. It's unfortunately, I hate to say somebody's going to suffer, but it's got to happen for us to go, you know, much.
You know, we talked a little bit about corn quite a bit there. Let's talk about soybeans. Is the story different for the beans this year versus corn?
Yeah, absolutely. So going back to that, the cup is a lot less full on the bean side. So, you know, the losses, the acreage is average. We'll call 83 million average. I don't know if some people, long-termers will think that's average, but, you know, so you have the situation that where you're not oversupplying the market just on purpose. The yield would be there or not there, and I think that'll dictate. We're still cheaper than Brazil right now, so that's good. Unlike corn, where you're pricing yourself out of the export market. And then the battle for me is next year. I think you'll see $9, $8.50, $9 beans if things go well for a while, because Brazil will need to plant. But I think next year it's like, okay, well, if we're going to do 89 million acres of corn, what are we doing on beans? 87? Are we going to get up to 88 again at $9? I mean, so you shake your head. You kind of those are the big pushes and pulls as far as decisions that farmers have to make right now. And it's really tough because the macro picture changes every day. It's going to get a huge change in November with the election or not. Whoever wins, it'll certainly throw ripples in the market. So it's like doing what you should have done the last 4 years, it's sell. Yeah. Doing what may be different next year, we've put a lot of money in this economy. Yeah. And farmers, in my opinion, I know there's tough times. I'm not belittling, but the average farmer right now, I think is going to be okay given the government payments. And that's really where decisions are made. And I think if we have government payments next year, we'll have big acreage again. So you probably should be selling some for next year as well. That's 2021.
Yeah, looking out ahead. Hey, as we talk about some of the other commodities here, I know you follow cotton pretty closely. What has the cotton market been doing? And as we talk about weather, hot and dry, you've got parts of Texas, one of our biggest cotton producing states, that's really been struggling, especially up in that panhandle area with the weather. Yeah.
Excuse me. They didn't get it in. A lot of folks didn't get it in, and we saw that in the acreage number. So Texas, they're 50, 60% more than that as far as acreage goes, and the irrigation that they have is going to help the acre there. The whatever's going to come in will come in. The question really, I think, is on what the dry land will be. I think the attitude has changed a little bit in the last 2-3 weeks. It was really dry there when we were wet in the Midwest, and now they've gotten some rains, but the question is what got planted, did it get up? And then, it goes back to my analogy for the economy. It's really, we have a lot of supply on hand, but cotton is one of those markets that's really relative to China, and specifically like the Chinese stock market correlation. And if you pay attention to any overnight trading, the Chinese stock market has been on fire, and it's taken off, really rallied. I think it's, maybe a precursor of what we can expect in this country as far as, we've put 15% of our GDP in the market. So it's like going out and you have a big credit card and that's going to be spent on things. You would think asset prices like, commodities would perform in that. The fundamental picture just probably isn't bullish enough yet for me to want to take that leap. But in a market like cotton, I think there's probably 65, 66 cents in it, but it's like the corn. If you sell it now and everybody grows it, I think it could be testing loan value again if the economy isn't opening.
Right. Yeah, John, one of the things that we've obviously been following here for the last couple of years is trade and some of the trade negotiations we've had with China. But we also, last week started the USMCA officially. Yeah. Where does the whole trade picture sit right now for U.S. Ag? What's on the horizon here?
Well, I think a lot of unknown for somebody like me, and I just look at the numbers. U.S. Grains Council and the people who are out really selling worldwide should be out saying, "Hey, our products are on sale here." I think one thing that would really help, and I probably have said this with you maybe the last 5 years. I've been doing this for a while. It's currency, and it's like if we can get the currency to change to make, a market like corn. Corn is a currency. People just don't want to hold it because there's a lot of it around and it's not being demanded more. But some of these new trade deals could come in and maybe they're going to start using corn. You just don't know. For somebody like me, I'm not going to be able to predict it. But demand has to come from somewhere. And the big increases we saw between 2007 and 2012 were really because of ethanol. And you can't replace that kind of acceleration in demand somewhere else right now. We would need to invent another product. And the real problem, in my opinion, is energy blow up because corn farmers, they feed the world, but they also fuel a big part of this country. And if fuel prices are down, then it's tough to see the need for corn to trade it, $4. Yeah. My advice with corn is get out of it, get rid of the currency. Farming hasn't been that bad of a business the last few years. Holding on to corn has been a bad business. Whether or not you're right or wrong, it just hasn't performed like it did in 2007 to 2012.
What about on the hog side of things? I know you keep a pretty close eye on that, do some newsletters on that side of things. Where are we at with lean hogs?
Well, optimistic in the back end. The report, a little bit of a liquidation that, occurred when things got bad. So I think those deferred contracts at $60, and I'm going to talk about April 60. This is 2021 now. $60. I just don't think you need to be hedging yet below that price. The front months, though, and specifically August and October, I just don't know if anything's it's going to trade like July has, where it just kind of dwindles out and falls south, unless there's an issue where we just don't need it. And I think the one optimistic thing, at least for me, is that on the livestock where it really matters, it's the economy staying open. Mm-hmm. It's not shutting everything off again, shutting it down. If they were going to take that tact, I think they would have done it already, at least this summer. So, but there's still a liquidation coming. And I think in a market like hogs, you have to just be tremendously careful to be too short-term on the long side. I know even technically it looked good. I know a lot of guys were trying to jump on that trade based off the story out of Brazil, but the U.S. citizens consume hogs. That's who it is. We export a very small amount relative to what we consume.
All right. Well, there are a lot of moving parts as we kind of try to get through the rest of 2020. Appreciate the insights as always, John. John Payne, author of This Week in Grains and Oilseeds, really appreciate the insight as always. All right, let's let folks know if you want to continue on and keep up with what's happening around the agricultural industry. You can do that by going over to agweb.com or visit us on a host of other social media accounts. As always, we appreciate you taking a few moments to spend it with us today on Farm Journal Live. I'm editor Clint Griffiths. Have a great afternoon. It started as social distancing, self-isolation, and caring for loved ones. A time for agriculture to be proud, to be essential. Now, it's changing. While states start to reopen and jobs resume, out here, the clouds are building. The path is uncertain. It's not the first time, it won't be the last. But we'll farm on. This soil is soaked in generations of sweat, of reinvention, of grit. Farm on is a calling. It's a mantra, a mindset. When the horizon dims and things turn dark, we'll find the light. We may be doing this for you, but we're also doing it for them. 2020, now's the time to farm on.